And thank you for the opportunity to offer comments on Senate Bill 1136, an act concerning property tax reform. The bill's a little arcane for people who haven't been reading it without end, so I'll just give a few details. The bill proposes certain modifications to legislation regarding the Municipal Revenue Sharing Account, or MRSA, as I'll refer to it. As you all know, the MRSA is a general fund account that's meant to be funded by a portion of state sales and use taxes raised locally. Its revenues are then meant to be returned to municipalities. Since it was formed in 2012, the MRSA has been repeatedly underfunded, and municipalities have not received the totality of their anticipated grants. And this bill is partially a way to address that. The bill does a few things. It allows the members of any council of government, or COG, to establish, by unanimous consent, a regional cooperation program designed to create efficiencies and reduce costs, and to receive grants from the MRSA for that purpose. It also requires towns and cities from October 15th of this year to set their motor vehicle property taxes at a mill rate no higher than 35. It creates a revenue stream for the MRSA by depositing into the account a percentage of sales and use taxes, and that's already in existing statutes. And basically what the bill does in addition to that is just outlines the purposes for which MRSA funds would be available. Two of them exist already. One is manufacturing transition grants. The other is sort of leftover funds that would be allocated directly to towns according to a formula. In between those two, in order of priority, there are also grants to COGS, not just to municipalities. One of those types of grants is related to regional cooperation agreements, and the other is to the car tax reductions. I believe that certain principles underlying the bill are sound. I support regional cooperation when it's voluntary and not mandated. There is also no question that there's a need for an effective mechanism to provide state funding to municipalities. There's also been a long-standing concern about car tax rates statewide, that they're inconsistent, and that may need resolution. But all of that said, I will get to my number of concerns about the bill. Section 2 and Section 4C suggest that COGS that create regional cooperation programs would be eligible for MRSA grants. Section 4A indicates that these grants would be awarded at the sole discretion of the Secretary of the Office of Policy and Management, OPM. But no procedure, criteria, or competitive process is delineated. Section 3 suggests that each COG would receive an MRSA grant in relation to reductions in the municipal car tax. Again, here the language is very, very vague. If the purpose of the grant is to reimburse towns that would lose revenue due to vehicle mill rate reductions, it's not clear. It doesn't actually say that. There's also no distinction between towns that would lose and those that would not. Section 3 says that each COG would distribute its grant to its members in proportion to the amount of sales and use tax they collect. Once again, the grants to COGS would be awarded at the sole discretion of the OPM Secretary. In the case of both types of grants to the COGS, the bill gives OPM decision-making authority over the use of taxpayer funds without any oversight, for example, by the General Assembly. The bill also offers no guidance to COGS on what they must do exactly to receive grants for regional efficiencies or savings. Because the language regarding grants to COGS is so vague, it offers no assurance of revenue replacement to municipalities that would be required to reduce their car taxes. Towns and cities with unchanged car mill rates could find themselves subsidizing what we might call equalizing grants, and if there weren't enough funds to go around, it's even possible that all municipalities could lose money regardless of their mill rates. And then, of course, they would be obliged locally to raise their own taxes. Finally, MRSA funds have been diverted for other general fund purposes in the past, and the bill doesn't address how to prevent this in the future. Finally, one further last remark. The bill inserts the COGS in the car tax portion of the bill into a funding mechanism, MRSAs, that has until now involved only municipalities and the state. In my testimony on another bill, Senate Bill 1, and I'm not going to draw any other similarities, it's just this one point, I gave that testimony before the Planning and Development Committee a few weeks ago, and I've attached it for your reference. I noted there my concerns about that bill's proposals for involving the COGS in collection and redistribution of local property taxes. Here, of course, we're talking about state-levied taxes. Senate Bill 1136 raises similar questions, particularly in regard to the car tax provisions, because the role of the COGS in distributing the grants seems unnecessary. They appear to add nothing to the process except another layer of administration, or even the possibility of exercising regional influence with OPM, which can make grant allocation decisions on whatever basis it chooses. And this situation multiplies the possibilities for inequitable decisions. So as you assess the bill, I would respectfully urge the members of the committee to increase protections for the MRSA funding stream, to provide guidelines and criteria for the regional cooperation grants, and either to remove or substantially modify the provisions related to the car tax. Thank you very much for your consideration of these suggestions.
Thank you, Representative. You are aware, though, there's a current mechanism in place that allows for grants to be offered to regions on a competitive basis.
Yes.
So this kind similarly builds off of that relationship between the state and regional COGS, but adds a revenue stream. I see in your testimony also you talk on subsidizing, equalizing grants, and certainly it's not the intent of the underlying bill to subsidize and not create winners and losers. That's the process that has failed in the past in this legislature, and that is the process that we need to move away from in what we do within the context of the proposed bill here, underlying bill. So we're trying to create a pass-through based on sales and use tax revenue through the region, redistributed back. I will look at tightening up the language as it relates to OPM and disbursement back, and we'll discuss that.